We are the poorest we've ever been. And I came across a chart earlier today on Twitter that states Americans are the poorest that they've ever been. Now, that being said, this is an American thing right here, but, Canadians and Americans have always been pretty much on par with each other aside from, the last 10 years pretty well. We've been pretty on par with each other in terms of wealth and how the middle class performed and everything. So I think this chart is somewhat accurate to how people in Vancouver feel right now, right? And basically what this is it's instead of indexing the median household income to CPI, because I hear people do this all the time and oh my God, it pisses me off, man. I see like somebody will be like, oh, $100,000 in 1993 after you adjust for inflation is $260,000 today. No, it's not, dude. There is no way that $100,000 is, only 2.5 times more money today. That $100,000 in the 90s could buy you probably like 15 times more things, right? And the reason why when you index to inflation, it doesn't really make sense is because obviously the CPI is manipulated, right? So for a more accurate gauge of what's going on, you would actually index it to like the price of gold at that time to see how much purchasing power that you had. Because gold is a lot more stable, right? It's a lot better gauge of actual purchasing power. And I think the Fed, like way back in the day, the old Fed chair, he used to adjust policy based on the price of gold. Like if the price of gold was over 400, he knew he was too loose and he would tighten rates. If he was, if the price of gold was under $300 an ounce, then he would have to, loosen the rates and stimulate the economy, right? So anyways, here is the median household income adjusted for gold. So this is gold adjusted median household income. This is the purchasing power that your household income would have had at this time once you adjust for gold, right? So in the 20s, you would have made $2,000 a year, but you would have had $352,000 in purchasing power, right? Well, 1970, okay, if you look at the 70s and the 60s, if you made the median household income of $8,700, you would have had a purchasing power of $753,000 with the amount of gold that you could have bought back then. So anybody who worked a normal job in the 70s could have bought a Lambo, right? And then in the 80s, obviously, something happened with gold. I think they had a lot of inflation. The price of gold soared, and then everybody's purchasing power went down basically 90%. And then if you look at today, I mean, it's pretty similar. You have a purchasing power of $80,000. Essentially, you can buy way less gold today. You can buy almost 10 times less gold today with your income than you could in the 70s. Now we go back to housing, right? Because obviously that looks pretty bad, right? And wages outgrew the price of houses nearly 7x. And everybody calls this a bubble, right? Everybody's like, this is, a crazy bubble. The valuations have to come down ridiculous amounts. And investors, this is all caused by investors pushing up the prices of real estate. You can buy less house because of investors, but house isn't the only thing you can buy less of. You can also buy 10 times less gold, right? And I don't know if investors did that. Overall, the reason why we are broke is because of inflation, right? And it's inflation that is caused by mismanagement in our government, pretty much. That's my opinion anyways. That is the root cause of all of this. And we can go and we can pick out little things that are, happening that don't aid the situation, that actually, maybe like investors definitely make the situation worse, but they're not the overall the problem itself. And I'm going to show you right here. So in 2000, a $300,000 house required 724 ounces of gold, and a $150,000 condo needed 362 ounces. By 2005, this is Vancouver real estate prices adjusted for gold, by the way. A $450,000 house needed 836 ounces of gold to purchase it. So it actually went up in those 5 years. You needed more gold to purchase it. The value and the price went higher. And condos were $225,000 and needed 418 ounces. So that's, an extra roughly 50 ounces of gold you would have needed to purchase a condo, right? And then in 2008, basically by 2012, a $950,000 house only needed 570 ounces. So that is basically almost 250 less ounces of gold you needed to purchase a house in Vancouver in 2012. And you fast forward all the way to today, where the house price is 1.259 million, and you need 538 ounces of gold, which is, 300 ounces less than you needed in 2005 and 200 ounces less than what you needed in the year 2000. So although the price of real estate went up over this time period, the actual valuation of it went down like 30%, right? So everybody's saying, it's in a bubble, which, it could be, right? But I think everything is going to look like a bubble when the actual dollar itself is crashing, right? If we denominate the price, because everyone's calling it an everything bubble, if the price of everything is denominated in the dollar and the dollar's crashing, well, then everything's going to look like it's in a bubble. So basically what they're saying is, for investors, the gold to housing price ratio reveals a significant decline in Vancouver's real estate intrinsic value from 836 ounces for a house in 2005 to 272 ounces in April 2025, and from 418 to 181 ounces for condos. Was it 272 ounces? Needed, I thought it was 538 ounces. All right, whatever. In Vancouver's supply-constrained markets, local factors like zoning restrictions and foreign buyer policies continue to influence prices, but the gold perspective highlights broader economic trends. Investors should diversify portfolios with assets like gold to mitigate risk from currency devaluation and housing market volatility. Inflation and purchasing power. The disconnect between housing, gold, and the consumer price index underscores a decline in the purchasing power of money. According to Statistics Canada, Canada's CPI rose by approximately 78% from 2000 to 2024. However, Vancouver house prices increased 304%, and gold prices in CAD increased 975%. So the CPI went up 78%, but the price of gold went up 975%. And there's probably a lot of things that stayed, exactly equivalent to an ounce of gold. Like, I would say that is probably the real inflation rate, is 975% since that time. This disparity shows that the housing and gold have outpaced general consumer goods inflation as measured by CPI. The CPI, which tracks a basket of goods and services, understates the erosion of purchasing power for major assets like housing. For example, a house requiring 724 ounces of gold in 2000 now only requires 272 ounces, indicating that real estate has become cheaper in real terms, while fiat currency has lost value against both gold and housing. The divergence between housing, gold, and CPI points to a decline in real incomes. Median household income in Vancouver rose from $50,000 in 2000 to $90,000 in 2024, a nominal increase of 80%. However, this is roughly in line with CPI growth, meaning real income growth has been stagnant. Meanwhile, house prices have outpaced income growth by nearly fourfold, actually 7, making housing increasingly unaffordable. In gold terms, incomes have lost ground. $50,000 in 2000 was worth 121 ounces of gold, but $90,000 in 2025 is only worth 20 ounces. So your income buys you 6 times less ounces of gold. Although it's apparently kept pace with the CPI, you can buy 6 times less gold. If your income could buy you 121 ounces of gold 25 years ago, and now your income has gone up almost double, but buys you 6 times less gold, I think you would probably think that there are some bigger problems at play here than just the cost of housing, right? That's the main one we all talk about, is the cost of housing, the housing crisis, more supply, this, that, investors, developers. It's the only thing you ever hear about. But nobody talks about how your income has lost purchasing power, how you can buy 6 times less gold while making almost double the money 25 years later. And nobody talks about how your purchasing power on a household income was $750,000 in 1970, and now it's 80 grand. So anyways, hope you enjoyed that video. If you want to chat with me about buying or selling in the Fraser Valley, link down in the description. Otherwise, if you enjoyed the video, like, subscribe. I am That Agent Kelly. I'm making moves to move you. Peace.